to the What Bitcoin Did podcast.
Hello, welcome to episode 8 of the What Bitcoin Did podcast. I'm your host, Peter McCormack, and I am a crypto trader and miner. Thank you so much for all the great feedback I've had on the last 2 episodes with Charlie Lee and Laura Shin, and thank you to anyone who shared that out on social media because it really does help support the show. This week I have an interview with Kyle Samani from crypto hedge fund Multicoin Cap. I first became aware of Kyle through some of his quite blunt and challenging tweets around crypto and specifically Bitcoin. He doesn't pull any punches. He will get out there and tell you exactly what he thinks, even if it's not along with market sentiment. I find that quite refreshing. I quite like the fact that he really doesn't put things out there just to make friends, and that he's willing to have a debate around the key and challenging subjects in crypto. So with all the institutional money that's coming into the space, I really wanted to sit down with him and have a chat about the things that affect him and their investment decisions around their fund. Since we recorded the podcast, Multicoin Cap have announced they have closed a new round of investment from a pool of investors, which include Mark Andreessen from Andreessen Horowitz. So I just want to give them a congratulations from me on that. And in other news, market is pretty flat. Still haven't seen any sign of a positive recovery from the Jan and Feb crash. Bitcoin itself is trading sideways, and most of the alt market is pretty depressed. So right now, personally, I'm just holding on and riding this one out, using patience. As ever, look, if you want to support the show, there's a bunch of things you can do. I do ask this every week because it really does help with increasing the reach of the show. So please do drop us a review on iTunes. If you think it deserves a 5-star, that would be really cool and really helpful. You can follow me on Twitter, Instagram, Medium, Steemit. My handle on all of them is at What Bitcoin Did. And if you want to reach out and talk to me, I respond to pretty much anyone. You can check out my website. And I've also got a blog and an email newsletter. You can do that at www.whatbitcoindid.com, and you can share this out on social media with all your friends. So now for the interview with Kyle. I hope you enjoy it. Apologies as there are a few minor sound issues. A couple of points in the podcast, there's some crackling, so I apologize for that, but it shouldn't affect your ability to listen along. If you do have any questions or you want to get in touch, do reach out to me. Like I said before, I try and respond to everyone. Okay, see you soon. Hi there, Kyle. Thank you for agreeing to meet me to do this podcast. So looking into your background, you have a computer background, and your first startup was at 23, right? Pristine?
Started a few years ago.
Yep. Can you tell us all about that and what you learned from that?
Yeah, happy to, Peter. By the way, thanks for having me on. Super excited to be here. So I started programming when I was young, studied finance at NYU, thought I wanted to go work on Wall Street. While I was in college, I realized that was not my passion. Started working for a company right out of college that built software for hospitals, like electronic medical records. So I was really deep in the weeds of like workflow of doctors and surgeons and nurses and stuff in a hospital. And I wanted to quit and start my own thing. And Google announced this cool new toy in 2013 called Google Glass. And I just thought it was the most compelling piece of technology I'd ever seen at the time. And so I quit and started Pristine in May of 2013. I was 23 years old. Pristine built software for Google Glass for use by surgeons. We ended up that branching out into a few other kind of areas within the hospital and within the healthcare ecosystem. But we were building solutions for glass, primarily for surgeons. Grew the company to $1 few million in revenue, grew to about 30 employees, raised about $5 million in venture capital, and then Google kind of pulled the plug on Google Glass. That was a minor problem for me. Ended up pivoting the company and ultimately exiting the company, and found myself unemployed in January of 2016. I spent about 2 months playing video games, and then I discovered Ethereum in March of 2016. And Ethereum is what really drew me into crypto. In particular, I was really drawn to the fact that with Ethereum, you can't pull the rug out from under me. Given my experiences with Google and the Glass project, that platform risk was a particularly painful experience. And because it was decentralized and open, et cetera, I was not really worried that anyone was going to pull the rug out from under me, and that was a particularly compelling draw.
How did you discover Ethereum? Because my background, most people I ask how they first got into crypto, it's either Bitcoin or Doge, unusually. But how come it was Ethereum? How did that come up before, say, Bitcoin?
Yeah, so I bought some Bitcoin, I think back in 2013 or 14, but I was running Pristine at the time. And so It was, I was like, oh yeah, I guess all the tech people are doing it, so like I'll do it too, kind of a thing. But I really had no substantial interest, and I was too focused elsewhere. After, I finished with Pristine and I was unemployed, and I was like, well, what am I going to do with myself? I was like, oh yeah, there's this Bitcoin thing, and then I discovered this Ethereum thing, and like Ethereum is what really drew me in a more substantial way.
And what is the reason for that?
Yeah, so I mean, I'm a developer by background. I'm pretty technical. I built software is my thing. I love software, and the opportunities to build things on top of Ethereum was what I was like, this is cool. I had only ever thought of Bitcoin as basically value transfer, and that's basically all it can do. There are some limited scripting abilities, but they're pretty primitive. Ethereum obviously is much more expressive, and it was pretty clear to me there was a large design space of things to build on top of Ethereum, and that's what got me excited. So
what happened between then and starting Multicoin Cap?
Yeah, so kind of discovered Ethereum in March, started diving into it, learning. At that point, I was like, okay, well, I should learn this Bitcoin thing too. So dove in the history of Bitcoin, how it works, the debates, the various people, the characters, ideologies in the space. Then Ethereum, same thing. Really learned how the thing works. Started investing in the space at the time, and just kind of over 2016, my interest kept growing. Every week, spent more and more time on it, and I was unemployed, so I had a lot of time to spend. Meanwhile, to Tushar, who's my co-founder of Multicoin, he's my best friend, and we kind of started. He was working; he was not unemployed. But we would, every night we would share notes and talk about stuff, whatever, and just kind of iteratively get more into it. We started doing some early ICOs in late 2016. I think most notably Augur. We started mining Zcash pretty early on, and then by the time we hit May of 17, we just realized that this is coming to speed, and so we decided to do what we were doing professionally and launch a fund.
Okay.
So made the decision in May, and the fund went live on August 1st.
So was that all your own money, or did you raise capital alongside it?
Yeah. So our first close, we had some outside capital. Our primary anchor LP, or our primary anchor investor, his name is David Johnston.
Okay.
Founder and chairman at Factum. Has been an amazing person to work with. Super helpful, super informative, and really great.
Factum's a great project.
I'm a big fan. It's kind of under the radar. I'm a very big fan.
So one of my friends who he worked for Facebook and he's got a background in tech. He said sometimes the best money is to be made from the under the radar boring projects.
I mean, Factum is not sexy. It's not fun to talk about. It's pretty boring. It is really cool. It solves a lot of big problems for businesses. And I think it's a really, really big idea.
So essentially you've set up a hedge fund.
Yep.
How did you go about setting up a hedge fund if you have no background in finance? Was there a big learning curve, or was it just throw yourself in there?
So we have a little bit of kind of finance background. So Tushar and I met at NYU, both studying finance. He actually did work on Wall Street for a little bit, but he also started his own tech company. So definitely we're more tech entrepreneur oriented than hedge fund or investment banking oriented. Although we do understand that world, and a lot of our friends from college obviously are deep in that world, and so we have a pretty solid understanding of just how it works. In May, when we got started, the first thing we knew we had to do was get a law firm and get lawyers and stuff. So we just started. We were also on a pretty tight budget, and so we called up our friends. Conveniently, one of our friends who from college, his name is Fred. He started his own hedge fund, just value, long, short equities. Really, he's a Benjamin Graham, value investor kind of guy. And he was more small hedge fund, a few $1 million, mostly his own money. Maybe his parents, I don't know who else, but small hedge fund. And we're can you recommend some lawyers to us? He pointed us to a few lawyers. And we ended up going with a gentleman named Simon Revelis. He's based in New York. Simon has been fantastic. He ended up being great to work with. Helped us through all the legal docs, the questions, what are common terms, what are not common terms, how do we deal with all this weird crypto stuff? So kind of got all that together over the summer, started fundraising, and went live August 1st.
And you are exclusively crypto investments?
We do exclusively crypto. We only invest in tokens. We don't even invest in equity of crypto-related stuff.
Are you aware of any key issues that face a crypto hedge fund that are different from a traditional hedge fund?
Yeah, so the most obvious one is custodianship.
Yeah.
It's by far the biggest. Beyond that, there aren't too many other, I'd say, substantial differences. Custodianship is real. There's other, I think, smaller things. So, for example, how do you mark the price of the assets? So, because these things trade on so many exchanges and the price is different, and typically Korea trades at a premium to the US, but not always. And so if you use coinmarketcap.com, for example, to market prices, you're, assuming you're based in the US, you're generally overstating the prices, but occasionally you're not.
Okay.
And so like, how do you market is debatable. What exchanges do you use? How do you manage counterparty risk? There are more substantial issues in crypto than a traditional hedge fund, but the other ones are, given how volatile these things are anyways, even if you mismark something by 2 or 3%, like if normal daily swings are 5%, then it kind of doesn't matter, right? But custodianship is the big one.
And then in terms of strategy, what is your approach to investment? Are you making short-term investments, or are all your positions long? What assets are you looking at? Do you have can you talk to me about that?
Yeah, happy to talk kind of generally about how we approach the space. So kind of officially, we're a long biased, stage agnostic crypto hedge fund. We will use shorts and derivatives occasionally. If we do, that's going to be on a shorter term time horizon. I don't think we'll ever be short the market, although that there may be exceptions. We have no formal mandate at all to be long or short or to have some USD balance. And we do use USD and derivatives to get to get neutral or short exposure as we'd like. With regards to, I'd say, our primary effort and energy is really deep fundamental analysis and rigor. Both Tushar and I are technical. We've both been tech entrepreneurs. We've both built companies. We've done the dance of how you hire people, recruit people, raise money, do all these things. And so we like to take bold bets on big ideas that we think can change the world. So we spend our time, for the most part, thinking like venture capitalists, but just exclusively within the crypto ecosystem. Whenever we do invest, we invest on a multi-year time horizon. So we always invest aiming for big returns, and that's going to happen on a longer-term time horizon. That doesn't mean we won't necessarily gross down our portfolio. We will reduce exposure to the market generally, through either derivatives or using US dollars. But when we make an investment, we make that investment, intending to be involved, active, helping the team, knowing what's going on in the weeds for multiple years.
So even when there is a huge spike in price, are you usually ignoring that and expecting a drop? And you tend to be in things, are you looking to be in things for years?
Yeah, we always have a multi-year intended holding period. Keyword there is intended, so things change. If you think about a traditional venture portfolio, once you invest in a traditional private equity company, your assets are locked up for basically indefinitely, right? But here, obviously, our assets are liquid. And so if we get information that causes us to change our mind about a particular investment, then we can either size it up. If we get more conviction, we can size it down if we have less. Or if we've lost all conviction, then we'll obviously reduce it to zero. Or if there's something else has come up and we're just like, this is just such an amazing thing, like we need to take this capital and put it somewhere else.
So your fund is essentially a calculated bet on the success of blockchain crypto, and that essentially we're very early, and this is most likely will be a multi-trillion-dollar market. Therefore, what's the point in trying to overplay the markets now when there's so much growth ahead of us?
I mean, we're clearly we're very long biased. We expect these technologies are going to change the world, create trillions of dollars of value. I take that as basically a given. But there's lots of things to do from there. So market timing being the simplest example, but picking the right horses, adjusting things accordingly, and then being value accretive. So for example, like I've been very publicly, I'm not a huge believer in Bitcoin anymore. I was at one point.
We're going to talk about that.
I have lost a lot of faith. So like if you just went like long the market in general, today I think Bitcoin represents something like 40 to 50% of the total market cap of all the coins. And if you exclude, let's call it just the outright garbage, that's probably closer to 50 to 60%. So if you were to go long the market in crypto, all right, you're getting a lot of exposure to, in my opinion, half the portfolio is in the wrong camp. It's not to say we have zero Bitcoin exposure. We have some Bitcoin exposure, but our Bitcoin exposure is pretty small. But we think there's way more alpha to be generated on other assets.
And there is often the talk by various people in the crypto Twitter universe that there is I can't remember who said it, maybe it's Barry Silbert, but there is a flood of money waiting on the sidelines from institutional investors. You obviously are mixing in those circles now. What is stopping people invest traditional venture capital or family offices? Are they waiting for regulatory change? Are they dipping their toes in the water? What is stopping this wall of money coming in?
So for the institutions, the endowments, the foundations, the pensions, and the sovereign wealth funds, maybe less the sovereign wealth funds, but they have at least some handicaps. But definitely the endowments, foundations, and pensions, they just have very strict operational and compliance processes for things. And like, quite frankly, none of the crypto hedge funds are there in terms of that. Custodianship is the obvious one, but there are all kinds of other just operational things that we're all getting in place. For example, one thing, for example, is like employee trading policies, right? So it's pretty standard that like partners shouldn't be trading, a normal hedge fund shouldn't be trading equities outside the fund, or at least not without disclosing that too. This has to be some sort of disclosure compliance process, right? And like if the hedge fund GP goes up and signs up with Charles Schwab, for example, to have some sort of personal retail brokerage account, right? Then like as part of the onboarding process, it's going to say, do you have any ties or restrictions? But in crypto, none of the exchanges have anything like that. So I mean, there's a bunch of just like logistical things.
So almost like if one of the funds was looking to buy, say, Factum, which isn't the most liquid asset, but if they were looking to put a considerable amount of money and they could move the market, they would be able to buy ahead of. Is that what you're talking about? They can buy ahead of that and get a low price.
Correct, right? I mean, there's all kinds of just operational challenges, right, of that, and there's no way to like tie, for the most part, identity to whoever's making those trades. And so there's just, custodianship is by far the biggest, but there's all these other procedural operational things that are just barriers for them. The family offices, I mean, it's their money. They can do whatever they want. They're learning. Some have been very aggressive and have gotten in a substantial way. My sense is that represents under 5% of the kind of family office money in the country is in crypto. I think a lot more is still to come.
And there's a lot of talk about Wall Street traders increasingly getting involved maybe privately. Do you think there's different challenges for Wall Street traders in crypto? It means they can't just necessarily join this market and start making decent returns. Are they trading these assets? Is it a completely different mindset?
I suspect most guys approaching this, who work on Wall Street in some capacity, have a very different view than I do about the market and how to play it. But like they're generally smart guys, and like a lot of them know, hopefully they're smart enough to know either be passive and buy and sit, or if you're going to be active, you need to have a strategy. And if you know what your strategy is, you know how you're going to generate alpha, then hopefully you stick to it. There are a lot of guys who have been trained on quant stuff, who've been trained on just trading and market sentiment stuff. And those guys can probably make money trading crypto. Maybe they do it 3 hours a day and not 12 hours a day, but like they probably can still do that and make money. That's not my area of expertise, and I'm not really qualified to riff on it much, but I'm sure there's guys doing it successfully.
And the market volatility, is that a good or a bad thing for you guys?
I mean, I'd say overall it's good, because volatility is how you make money. You don't make money if there's no volatility. No risk, no reward. So I'm very comfortable with it. It scares people. Most of the investors we speak with, like the thing is, like, we're not asking them for 30% of their balance sheet. We're asking them typically for between 1% and 5% of their balance sheet. And at 1-2%, you can just say, okay, well, I understand the volatility is through the roof, but it's 1% of my balance sheet. So, that's okay, right?
Right. Okay.
As long as you size the portfolio, the position accordingly, then totally fine.
Is positioning difficult because of some of these assets quite illiquid? If you're buying too much at once, are you having to buy over multi-days?
Yeah, I mean, we depends on the asset, depends on the volume that day and stuff. But yeah, we have we have bots we've set up that we can kind of cost average into our positions.
Okay.
We use OTC desks.
Okay.
We have connections around the space to buy things in dark pools.
Okay, and there is questionably or arguably manipulation of the market. People often talk about the whales. Is this a good or bad thing, do you see?
I mean, market manipulation is always a bad thing. Like full stop, no exceptions.
But isn't that what also then drives the volatility?
I think that's part of it. I think on the smaller assets in particular, on the larger assets, I mean, on Bitcoin, to move Bitcoin substantially, it requires a lot of money. And there aren't many, typically at that size, it's not a guy swinging around. It's typically, an institution, and institutions just have more regulatory risk and are more conservative. And so I think are just far less likely to engage in that kind of market manipulation.
Do you think people are then overstating the role of whales within Bitcoin?
In Bitcoin, yes, at current size, absolutely. I mean, Bitcoin does between 5 and 10 billion is a normal day for Bitcoin. Like if you're $100 million, now you shouldn't, if you just go put an order on the order book, a market order, like of course that's going to move the market. And if you're stupid about it, but in general, if you are reasonably intelligent about placing even $100 million order, like you can get in over a few days and like be totally fine.
As long as the market itself hasn't moved in those days.
It will move over the course of that time. Yeah. You have to assume it will move while you're entering the position.
And I've seen that you recognize it's a bubble. But I put this I think to Laura yesterday. Are bubbles necessarily a bad thing?
No, not at all. Bubbles encourage people to get into the space. The amount of attention and energy going into crypto now from both the tech world and the finance world is an order of magnitude more than it was a year ago. And so, if this technology is not going to change the world, you're going to need, tens of millions of people putting their blood, sweat, and tears into this to make it happen. So I think that's good. There is substantial economic risk, and you just have to, again, be comfortable with that risk and size accordingly.
And I've also seen you say there will be a crash.
It seems like
a crash. Was that a correction? I mean, that would be a crash in stock market terms, right?
In stock market terms, it would certainly, January, February would have been a crash. I don't think this was a real crash. I think this was a correction. Relative to December, I think we're still up like something like 100% since December 1st. So it's pretty hard to say that the market's in a terrible state. I expect at some point there will be a very, very large drawdown. It will be kind of a valley of disillusionment, if you will, but we're not there yet.
Okay. And as I said to you in an email, when do you actually sleep? Because I noticed you were tweeting and emailing all night.
I think last night I went to bed at 11:30. I woke up at 4 for my flight.
Okay.
4:30 for my flight. Normal day for me is 5.5 hours.
Okay. All right. So listen, I want to move on to the Bitcoin thing because I don't agree, but I could definitely see your point. But I think I understand where you're coming from. So you put out some pretty challenging stuff on Twitter, and actually I think people appreciate it because you're driving the debate, which is good. It's too often people are just everyone's singing from the same hymn sheet. But you said, and people have misquoted you. You didn't call it dead, but you said it's failing. Can you explain why you think Bitcoin is failing?
Yeah. So, one of my kind of aggregate views of just basically all things in life in the world is evolve or die. You're either evolving or you're dying, and I don't think Bitcoin is evolving at any substantial pace. Not to say there's zero development activity, but it's not very substantial. Of the development activity that is happening, I believe quite firmly that it's pointing in the wrong direction.
Can you expand on that?
Yeah, so Bitcoin, Bitcoin Core, the kind of group, they espouse kind of maximum. They call it maximum decentralization, maximal censorship resistance, etc. And their basic view is that you have to put this variable and optimize for this variable of all of the variables. Mm-hmm. And one of the kind of variables you have to not optimize for, if you are optimizing for, I won't even say decentralization, but theoretical decentralization. I'll come back to that in a second. But if you're going to optimize for theoretical decentralization, one thing you have to forfeit is scalability, among other things. And my view is that we won't have just digital gold. I just don't think that will exist. I think that we will look back on that kind of term as an anachronism of the times and a function of really just more of kind of the political debate around what Bitcoin should be. But to me, I think Bitcoin's view of what it should or shouldn't be is my view of what Bitcoin Core's views are incorrect and just heading in the fundamentally wrong direction. And the pace of evolution is far below what it needs to be.
So what is it, in your eyes, what is missing?
So I wrote a post about a few days ago, and it's titled Models for Scaling Trustless Computation. Yep. It's long, and it's pretty technical and involved. It does assume pretty substantial knowledge in the space. But basically my view is that, store of value just as its own thing, in and of itself will not sustain in the long run. There are lots of smart people who disagree with me, and I respect a lot of their opinions and understand why they say that. I just think on a long enough time scale that you will have good stores of value that are censorship resistant, that cannot be, that are trustless, permissionless, censorship resistant, and are useful and have utility. And in that world where those things exist, I just don't see a place for Bitcoin, which basically is only censorship resistant.
So are there any assets out there you believe are achieving that right now?
I think there are assets today that have very credible claims to make that they're on a path to achieve that and be superior to Bitcoin on achieving that in basically all respects. I don't think there's one today I can point to saying unilaterally it's better, but I just look at the roadmaps for these things. And
can you point to any that you consider are in the mix?
Yeah, so in my post, models for scaling trusted computation, basically everything else in the post other than Bitcoin, I consider to have a better shot at it than Bitcoin.
Okay.
Primarily because these teams are willing to try other things. They're willing to approach new models, make new sets of trade-offs, and explore new design spaces of things that can happen from there. The Bitcoin view I find to be extremely myopic. Satoshi Nakamoto was obviously brilliant and came up with a very compelling kind of new way to think about the world and technology, and like no questions asked was a huge breakthrough. But I also find it basically impossible to believe that was actually the best and right model now that we've kind of had our mind open up to this new design space of ideas and thinking. And I find it almost impossible to believe that's the case. And Bitcoin's view is basically that like they will not change any of those, none of the core views of Bitcoin have changed really since inception. And I think the design space to do new things is very substantial, and you will ultimately find systems that are basically unilaterally better on all fronts.
You often talk, and it comes through in a lot of your posts, that you're not really a fan of decentralized governance. You essentially believe there are leaders and there are other people who aren't leaders, and there are also very strong leaders. And I think you put out a guide to hiring CEOs from one company.
Andreessen Horowitz published something 4, 5, 6 years ago called, I think, How Andreessen Horowitz Evaluates CEOs. I tweeted that out, I think, a week or two ago.
And I see what you're getting at. And actually, even though I'm a fan of Bitcoin, I understand what you're getting at, because sometimes you just need somebody there to make a decision. Like Ethereum has Vitalik, who can make a decision. I discussed this with Charlie Lee yesterday, in that Litecoin is able to move faster and quicker because he is essentially the leader and he can make decisions. And against Bitcoin Cash, Bitcoin never had an individual who could fight back against Roger Ver. So I see what you're getting at. So do you think decentralized governance is actually holding crypto back, and it's a utopia that isn't required?
I think I can demonstrate quite empirically that statement is true, that decentralized governance to the capacity it exists today does hold you back. I would argue the only projects today, there's maybe up to 3 that kind of have some notion of decentralized governance. Those are Bitcoin, Dash, and maybe Decred. And of those, Bitcoin is probably the most decentralized. If you look at, for example, Dash and Decred, they both have formal notions of on-chain governance and voting. But I find that, within their respective communities, most of the thought is very homogeneous and is overwhelmingly inspired and shaped by the foundations that kind of that shepherd the projects forward anyways. So although they have these kind of nods to decentralization in both Dash and Decred, I don't think that in practice there's any substantial decentralization of governance, although their systems theoretically allow for it. In the case of Bitcoin, you very clearly do, because you have this kind of clash between Bitcoin Core, a number of smaller, basically unused implementations, as well as miners, and then just like called the community at large and exchanges. And very clearly there's multipolar divergent views on what to do and how to manage the thing. And it's very clear, like the one thing you can say without any doubt is that as a result of this, Bitcoin evolves much slower than everything else. We have like massive amounts of evidence to support that. The kind of most obvious example recently is SegWit. People made a big fuss about SegWit. They fought about it for a long time. Eventually got implemented, I think, in August. And I think today, Bitcoin, that's been 6-7 months. Bitcoin is, I think, like 15 to 20% of transactions leverage SegWit. So the system just obviously evolves incredibly slowly.
Is there an argument, though, that moving slowly supports anti-fragility?
So that's an argument. I just flatly don't buy it.
Okay.
At all. Again, like on a short-term time horizon, that statement is probably correct. On any long-term time horizon, I think that it's evolve or die. It always comes back to evolve or die. And Bitcoin clearly does not evolve at a reasonable pace.
And is there a potential that you're clearly a capitalist and the roots of Bitcoin are libertarian? Is that a clash? That's potentially why. Are you approaching this like a capitalist, saying this is a project, it needs to make money, it needs to move, it doesn't, and they're the kind of projects you're interested in money and revenue generating, profit generating capitalist projects?
No, I understand that the whole point of crypto is to have systems where there's no middleman extracting rents, which would be the kind of quote unquote profits you're speaking of. Yeah. I fully bought into that, and by definition, if you look at our portfolio is, if not 100%, is overwhelmingly, projects that don't have an explicit profit motive in terms of like extracting rents and charging fees. So I'm very on board with that vision, and I believe it will happen. It is harder to make money in this new world, and how you think about incentives and value capture and these kinds of complex issues. But I'm very much a capitalist. I think Bitcoin is very aligned with the capitalist view. It's just very disruptive to the traditional notion of human organization.
So does decentralization matter? Or where does decentralization matter in this? Or is it just an overused term?
It does matter. Decentralization there's kind of multiple lenses through which things can be decentralized. But B, in and of itself is not a means. It is only a means to other ends. So some of the other kind of truly valuable ends are things like trustlessness, things like having a neutral database, things like being permissionless, things like censorship resistance. Those are kind of the four, call it major buckets of things, and they call it cutting out middlemen. So decentralization is a mechanism to achieve those kinds of ends. How you prioritize them, how you measure decentralization, there are different ways to do it. But it does matter.
But not in all projects, right? Some of these projects could be achieved without decentralization.
A substantial majority of tokens probably don't need to be tokens.
Right, okay. I saw you tweet out about Tezos a few times, which feels like a good place to... It's not a project I'm actually that close to. I didn't get involved in the ICO. I have seen a bunch of drama based around it about the husband and wife and their involvement. I have seen about issues recently with somebody just left. Oh, sorry, I forgot his name.
Johan Gevers.
Yeah. What's your view on Tezos? Because a lot of people are bullish about it, and a lot of people are bearish. There doesn't seem to be a middle ground.
So I'm in the bear camp,
and you're very outspoken about it.
So in general, I think decentralized governance will be so if we have a big global money thing worth trillions of dollars that impact that people all over the world and diverse countries use, in that state of the world, it makes sense to have some notions of decentralized governance. There will definitely be an endowment or a foundation that's kind of the primary benefactor or the primary shepherd of that ecosystem. And there should be some notions of accountability and control. I believe that generally should be the case. I think we are in no way today close to that state of the world.
Okay.
And I think right now, even playing with those ideas is a waste of time because of the opportunity cost of everything else that you could otherwise be doing. So Tezos, their kind of claim to fame, kind of a couple. One is the very strong focus on on-chain governance. And I don't know the details of the project, but from what I understand, it seems to be pretty closely a either direct democracy or liquid democracy type of structure, where basically there's people propose proposals somehow, somewhere. People who own tokens, anyone can go look at those proposals, and then you can basically vote based on your stake of ownership of the tokens. So it's pretty oriented around a direct democracy, or at least has a lot of inspiration from direct democracy. I just think that is not very interesting relatively. If you have a benefactor, and a benevolent dictator shepherding the ecosystem forwards, all of that complexity, all of that slowness, all of the decision making can just be expedited on the order of probably 10 to 100x faster.
Is there a risk also that people are voting on decisions they don't understand?
There's those risks too. I actually think that is less. I mean, there are risks of like toxic political campaigns and trying to manipulate opinions and all these other types of things too. But just like fundamentally, if you have the technical expertise and the wherewithal and the competence to launch a blockchain project, which is no small feat, and get millions of people using it and people building apps on it and doing all these things, if you have the wherewithal to do that, like you are in the top 0.001%, I don't know, some very small percentage of the world. That doesn't mean you are always right, that you're always the best, but that does mean you are extremely capable, and you should synthesize feedback from your community. You should talk to your employees, to investors around the ecosystem. You should solicit feedback, be very honest, and then make decisions and move forward.
Can you, because one of the things I was trying to think about is examples in the real world where there are some form of decentralized governance, right? And where it has or hasn't worked. And it might be a poor example, but I keep looking at the UN. You've got a bunch of countries with voting rights, and decisions hardly ever get put through because of different political reasons. And to me, that was the best example I could see of a failed decentralized governance. Do you see any similarities with that?
So I'm not terribly familiar with the UN or its structures or its history, so I'm not really qualified to comment on it. I will say, if I just draw on like capitalism generally, right? Like the world is, and capitalism in particular, is oriented on the concept of you as a person can do whatever you want, without, there's bounds obviously, like free speech and violence and stuff, right? But by more or less, you can do whatever you want, and like go try and change the world, and you're totally welcome. Or you can like sit at home and watch Netflix all day, right? And kind of wherever you want to fall on that spectrum, you can choose to fall. And when I think about capitalism in general, capitalism is extremely inefficient structurally, and yet it produces the most amount of innovation. So when I talk about inefficiency, right, what I really mean is, like people have typically directly competitive, right? There's Google and Bing and DuckDuckGo and 10 other search engine thingies, whatever. And there's right now, 10 different projects working on decentralized governance, and there's 10 different decentralized exchanges and whatever, right? But there's all these people who they at least have somewhat of the same general vision, and they're all directly competitive. And like in a quote unquote efficient world, wouldn't it be nice if those 10 groups of people like all got together and like weren't competing, and you got all those brains in one room and like had them work on it together? The problem, of course, is that we don't actually know what the right answer is, and so you need to let things be competitive and play out. And so my kind of view with decentralization is, coming back to decentralized governance, is like why should I as an individual even bother to try and vote, on these kinds of issues or have some substantial say? Like why not have just more projects in the world competing and putting forth ideas and letting the world in aggregate vote with its dollars? So basically, I think decentralizing at the project level is just the wrong place to decentralize. I would much rather just decentralize at the portfolio level.
Right. Okay.
And this is the same thing with your portfolio and capitalism, right? Like one company shouldn't do everything. Companies should specialize, do what they do, and then investors can choose where to put their capital.
I understand. Yeah.
So yeah.
Just back to Tezos though, you did also say you wouldn't invest in it.
That's correct.
And I think that's more to do with the chaotic, unprofessional operations as well. Well, part to do with it.
I mean, that's, to be fair, hindsight bias, but
the question I want to go with is why is it in crypto we seem to have this ability? Well, these crypto companies have an ability to operate with such chaotic, unprofessional structures, whereas in a private equity world it just would not happen. Why are they getting away with this?
Yeah, I mean, it's purely a function of non-professional investors, right? So professional investors, if you're a venture capital firm or private equity firm, and your full-time job is and has been to evaluate, companies, like there's very fast, you develop pattern recognition on things to look for, things not to look for, what are good teams generally look like, at least what are not so competent teams, right, et cetera. And people are like, there are people who are wrong. There's lots of people who missed Airbnb and lots of people who missed Uber early. I'm not saying that these guys are all perfect and right, but generally, like there's things that you look for in terms of team and idea and whatever, et cetera. And the problem is with all the retail investors, like this is not their job. Mm-hmm. And if you haven't been pitched 300 startups, like it's just much harder for you to really assess like what is good, what does a talented CEO or project lead look like, what does a talented CTO look like, What is a go-to-market? What are the even general tools available for go-to-market strategies, and which ones might or might not make sense to employ here? All of these just pretty elementary questions about like how, when we evaluate things, we ask like, well, I've been doing this for a long time. And I've talked to hundreds, if not thousands of other investors who also do this professionally. And if you're like, oh yeah, I read about this thing on the internet for an hour last night, and like normally I'm like a lawyer or like I'm a doctor, like your fundamental scope is just like orders of magnitude less complete. So you have all this retail money, this dumb money sloshing around. You have ideas that at least on paper kind of sound interesting. You have teams that do at least a kind of a reasonable job of like communicating them and getting them out there. And then everyone's excited about crypto. And so like put that together and you can get tens of millions, maybe hundreds of millions of dollars into something that in private equity world would like no way it should get receive that kind of capital.
Especially without some form of mentorship that comes with private equity.
Yeah, I mean, board control, governance, but also just, experience. And obviously once private equity investors invest, if they're putting millions of dollars of their own money on the line, obviously they have some fiduciary responsibility to their investors, and they not in all cases, but in most cases, roll their sleeves up and help out and get involved and open their Rolodex and, whatever else they can do. But if you just invested $1,000, off of with a street into Tezos, like, it's like there's no value add other than the capital itself. So
actually, is there a potential that, because there's been an increase in pre-sales to institutional money, which has seen various commentary out on Twitter saying, this isn't fair, this was a chance of retail, but actually, is that going to potentially bring more professionalism into these?
The space is professionalizing very fast, very fast. I think every venture capital firm in Silicon Valley today, has someone who's like, all right, I got to figure out crypto and working on it more or less full time, if not more than full time. So that's happening. All the VC firms obviously have capital and they have Rolodexes and the general operational know-how to be value accretive. And you're seeing startups, go talk to them. 18 months ago, if you were a startup who had some crazy crypto token idea, the VCs were like, this is nonsense, and they wouldn't talk to you. And now they're dying to talk to you. Yeah. So, so that's happening. And yeah, retail as a side product of this is that retail investors are getting less opportunity to invest in the highest quality projects. It is it's just a fundamental function of market dynamics. And, the best entrepreneurs want the best investors, and best investors don't want to write $1,000 checks. They want to write $10 million checks.
Yeah. And then with that, you also mentioned that the bar is you set the bar pretty high, right? Because the bar is pretty low.
I like to think so, but, feel free to disagree.
Well, I'm just thinking, has a bar even been set yet, right? Do we have any real proven successful projects out there we can point at and go, this is a success, this is proven, this is working? Even with Ethereum, if we ignore market cap, it still has proven to have certain scalability issues, which are being solved. I'm not questioning that. But do we have a bar that's been set yet?
Yeah, in terms of general operations and such, there is a bar. And there are great teams. So for 0x comes to mind. They've been very professional. They have never overpromised. They have never tried to go just raise money for the sake of raising money. They've delivered. They're a great example. Mm-hmm. And they exceed, they cross my bar. I disagree with the team on some things, and that's okay. I talk to them about it, and they consider my opinion, and our dialogue continues. If I choose to invest in 0x or not, I can invest knowing that I disagree, and maybe I'm wrong, maybe they're wrong, I don't know, but at least I can, as an investor, make that assessment and then manage that accordingly, right?
So what's gone right with 0x then?
Most things.
No, in terms of what are they doing right? In terms of, is it just the quality of the team? Is it?
They're very humble. They're just good people to get started with. They are frugal. They're not being wasteful with the capital they have. They're sitting on a lot of money and they're not burning it in kind of stupid ways. They engage the community. They communicate with people. They aren't trying to just pump up their token price and do other kinds of, let's call it shady behavior. They support, they're a platform on which other people build. And it's very clear that they are engaging those parties and working with them and helping them accelerate those things. So they're doing lots of things well.
Okay. So let's move on to Ethereum. You're a big fan. I'd love to know why. You're probably going into all kinds of technical details that I don't understand. I've done my best, but I'd love to know why you're so bullish on Ethereum.
Yeah, so I mean, basically, if you're like at the most simple level, evolve or die. And then like other kind of just really meta view is you could have programmable money or not programmable money. And I believe like you should have everything be programmable if it can be at like just the most simplistic level.
Right.
So that beyond that, the Ethereum team and the vision, they are incredibly audacious. They have huge vision. It is truly global vision. It's, I think, as big as you can think, given kind of what they do. And they are trying to do things that are basically considered impossible. They're not provably impossible, but they kind of on paper may be impossible. And they're going after it. They might not get it perfect, but they're trying. And that audacity, I find extremely compelling. The team has got some of the smartest distributed systems people in the world working either directly for the Ethereum Foundation or around the Ethereum Foundation. And they're getting some of the best folks, best brains, and they're going after it.
What are the risks associated with programmable money? I mean, we know we've seen smart contracts neutralized, hundreds of millions deleted. And actually, I heard an interview with Olaf Carson-Wee where he was saying that there's a real difficulty with hard forking to roll back these transactions because should the blockchain be immutable? But really, there's no loss with this money coming back. The only recovering funds that have been not even stolen. What kind of views do you have on this area of risk? And isn't this a big risk for institutions to start using smart contracts for programmable money?
So it's a very complicated question. Happy to dive into it.
No, it's three questions there.
So one is dispute resolution. So this is something that I think I'm probably in the minority of people in crypto and believing is I think you need some sort of dispute resolution system that can quote unquote break the rules of the blockchain. The like full stop immutability, there's been a cryptographic signature, like it's done, finality kind of a thing. I just think like that's not how the world works. The reason we have courts in the world is to arbitrate disputes. There are problems with legal systems, but like they exist fundamentally because there are disputes in the world, and like there will be disputes in crypto things, and you need some sort of way to accommodate that. I honestly don't have any good sense for how dispute resolution should be managed. It's an extremely complex process. I'm not a lawyer. Like I haven't studied the history of judicial systems.
I imagine jurisdiction on that's going to be difficult.
Jurisdiction, yeah. I mean, this is a super complicated problem, and I don't claim remotely to have a sense for the right answer. I do have a sense that like there is answers that are better than the status quo, which is nothing. So pretty low bar.
Potential risk though that if you do something, you are opening yourself up to more litigation in the future because you set a precedence that something can happen. Whereas
there's real chances, opportunities, people do things that are stupid and blow up, and who knows? It could be like lots of things can go wrong. I'm not questioning that. My statement basically is the status quo does not make sense, and therefore do something that's not the status quo. So I'm not saying much, but I am saying something. So I believe that should be the case. Given that there is no dispute resolution mechanisms today in smart contract platforms, there are risks that like there's always just call it catastrophic failure risk of like the wallet gets hacked or whatever, something happens that's just out of your control. Like no one could have forecast it. Like these things happen. It's unfortunate. I would prefer they didn't happen. And when they do happen, I would prefer there's some sort of dispute resolution system to accommodate that. I seem to be in the minority who believe in that. But I am a huge fan of programmable money. The design space it creates, I think, is enormous. And I think it's just starting to be explored. So, for example, I put out a piece a few weeks ago called New Models for Utility Tokens, talking about ways where you can think about how to create kind of the idea with tokens and how you can do different things with the tokens and give them new properties, with burning tokens, with minting new tokens, with staking tokens, with accountability, with token curated registries. I know that was a whole bunch of terms, but it's very, like, I don't know which of these will work, which one will be the best, why they'll be the best, like, no idea. What I do know is there's a massive new design space of things to have to be played with. There's lots of smart people playing with them. And I'm reasonably sure some of them will become useful and widely used and adopted. And like, we'll just kind of change our paradigms or how you think about attribution, owning assets, coordinating large numbers of disparate human beings. Like there's clearly a large design space here that is not currently that non-programmable money basically cannot accommodate.
Do you find at all that this new economy is potentially overcomplicated?
No.
Because, well, the reason I put that out there is I worked in tech during Web 1 and Web 2. From Web 1 to Web 2, we focus on simplicity and usability and experience. What I find is new people come to this space just find everything so complicated. And when you look at a lot of these projects that are being created, it seems to be that user experience and ease of use hasn't been thought about fully. I mean, is that something to come? You don't worry about that? Because that's something that I worry about.
Yeah, usability is a big problem. I'd say general product management, and call it like product orientation, is pretty poor in the crypto space. I am fairly certain these will all become solved problems. If you look at like the computers back in the 90s, right? Like it's the same analogy. People are like, what's the start menu thing in the bottom? And what's this all program? What is a program? And file system? What's a C drive? Right? And like all of this nonsense, and then connect to the internet, and you have to wait for the dial-up modem to beep and click. And then sometimes the DNS wouldn't work. Your router was, or what? Like there's all this stupid stuff that like, if you got everything lighting perfectly, it would work. But otherwise, it didn't. And then basically over, call it 10 to 15 years-ish time, like all that stuff got basically automated to the point of like no thinking required. And that's where, we're at today, is back in like the 90s kind of equivalent. I expect this will not take 15 years to accelerate in terms of general usability. There's just so many more people who know tech now, just generally in programming and design and product management and all these things. There's like the labor force is much larger. And they're all there's just so many standards that are well understood for usability and design and all these things. So that I'm quite certain will be much faster than it was before. The other thing is that it varies by team. So for example, the Ethereum Foundation is very focused on protocol layer engineering and research and development, which is important for all the protocol stuff that normal people don't deal with. And they just they have never really prioritized the user facing stuff much at all. But there are other teams that have made different views. So, for example, Dan Larimer, he built a thing called BitShares, I think in 13, and then 14, and then a thing called Steam in I think 15 or 16. And now he's working on this new thing called EOS.
You're a fan of EOS, aren't you?
I'm a fan of EOS. I think it's super interesting, making a very different set of trade-offs than Ethereum is. But my point is, though, if you just look at him and his projects, BitShares never. Today, certainly, usage is not very substantial. It's a pretty small community. I don't know the numbers, but it's not very large. Steam is bigger, but again, it's not like running at massive scale by any means. But both of those products on the 1.0 release worked, and they worked well. They were good, high-quality consumer apps that you could put your mom in front of, and your mom would like understand the UI basically immediately and navigate and do whatever the thing was he or she was trying to do. That was true for both those products. Now, EOS is not a product, it's a platform, so it's a little different. But conceptually, a lot of the same thinking and inspiration that went into both BitShares and Steam, it's very, like, you can see the inspiration of a lot of those kinds of concepts feeding into EOS. And I think that's going to create a lot of opportunity to onboard new users. It's just much easier than Ethereum is.
And in raising such a large amount of capital, that's a war chest for them to bring people onto EOS?
They have a lot of money, and they are run by capitalists who are competent and know what they're doing, and they're making bets and they're going after it.
Cool. Listen, I'm conscious of time, so I've got loads of questions, but I'm going to focus on a few that I think are important to me. I want to ask you about regulation. So some people love regulation, some people hate regulation. I'm pretty confident you are keen on regulation because it's probably good for supporting investment. So, but tell me if I'm wrong.
I prefer regulatory clarity. My general bias is less regulation than more regulation, with a few notable exceptions. But I certainly would appreciate more clarity.
What did you make of the Senate testimony on crypto?
Overwhelmingly positive.
Yeah.
I think there was a comment in there from, I don't remember which gentleman who was speaking, but I think the comment was something to the effect of, had we had this distributed ledger technology prior to 2008, we may have foreseen the financial crisis and have been able to avoid it. And like running a major federal regulatory agency and openly saying that to Congress seems like a screaming endorsement to me.
And the question I put to both Charlie and Laura yesterday was, as America seems bullish and the state seems to adopt wealth creation technology and going full guns with this, do you think at some point China is going to have to come back online with crypto? Because essentially we're going to have an integrated financial system across the globe, which if they don't join, they're going to be excluded from.
They will get back into the game somehow, some way, some shape. I admittedly know next to nothing about the Chinese government, but I just probabilistically find it impossible to believe that they're just going to sit on the sidelines forever.
And have you tracked this Venezuelan petrodollar at all?
Not much.
Do you consider nation state crypto? Because you've talked also about crypto being a threat to governments. Yet at the same time, we have, ignore the fact that the Venezuela petrodollar was a total, we would call it a clusterfuck in the UK. But we have Iran coming out, we have Turkey coming out talking about nation state crypto. What do you think is going on here? Do you have any opinion?
So I don't know any of the projects well enough to comment on them specifically. Generally, we have open permissionless systems, and so governments can use them. My kind of favorite analogy here is the internet. Back in the 90s, all the kind of tech entrepreneur people were like, aha, everyone's going to be connected, and it'll be like direct democracy and like self-publishing and like self-expression and yada and all these things. And then as it turns out, just private companies, Google, Facebook being the most obvious ones, and then the governments just like mass surveillance, mass censorship kind of a thing. So turns out in these open systems, power can be, the big guys who are already here can also use them. And so it's no surprise that we're seeing that happen now. My general sense right now is these kind of, call it first 1.0 of government crypto things. I'm rather certain they'll all fail for some reason or another. Just, it'll be a function of incompetence and lack of understanding and lack of vision and, all kinds of other things. But they should experiment. I expect, almost certainly, I think within the next 5 years, a government somewhere will launch an open permissionless crypto that the money supply is managed by that country's central bank. It will be price stable, and it will be totally open, and anyone in the world will be able to buy it. And I expect that will happen much sooner than people think.
Right. Okay.
I don't know what country it'll be, but I just expect some country will do it.
Like a stable coin. You mean
that would
a stable coin?
That would be a stable coin. Yes.
That would essentially be a stable coin. Okay. Cool.
Yes. It would not be it would just be managed by some government central bank somewhere, but it would be a price stable coin.
Right. Okay. Last couple of questions. Just want to focus on one specifically. You're a huge fan of Bitcoin Private, right? Did you see the price action today?
I have not looked.
It's absolutely collapsed, which obviously was to be expected. There are, a lot of people who listen to my podcast are traders. They're investors, right? A lot of them don't have the experience or the knowledge that maybe you would have, and they don't have the time to dedicate to it. But there's a couple of things that you put out. One, about holding no more than really 10 positions. You don't need to do that.
I find in crypto, given how generally correlated the market is, you don't need more than about 10, maybe 12 positions to achieve meaningful diversification.
And then something like Bitcoin Private is clearly one of those short-term view, I need to get in and I need to get out opportunities, which is not really great for the market. So in terms of kind of trading, what do you think are the kind of the key things that people should be focusing on when they're investing in crypto? Because, what should they be looking to and what should they avoid? Because you've obviously got a lot of experience now. You're looking at the market closely. What kind of advice can you put across to people who listen to my podcast?
Don't invest in things you don't understand.
But that might be everything in crypto.
Then just buy some of the big ones, Bitcoin Cash, Ether, maybe some Litecoin, passive. Use something like the Whole 10 Index. There are other, I think, passive index products. If you want exposure and you don't know you don't know what you're doing, use some sort of passive strategy. If you're going to do anything active, then buyer beware.
So you said Bitcoin Cash there. You're okay with Bitcoin Cash? You think it's a good project?
I think Bitcoin Cash has a more promising future than Bitcoin.
Really? Okay. I think we should let you answer that.
Very simply, evolve or die, and the Bitcoin Cash team has a far more ambitious vision and is simply willing to change more variables and assume that not everything is scripture set in stone. Okay. That the Bitcoin team is very rigid about. And I think for basically that reason alone, like Bitcoin Cash is more interesting and ultimately has a brighter future.
Brilliant. Okay, look, I want to thank you for this. Final question. What's the future for you? What's the future for Multicoin Cap? How can people get hold of you, and how should they get hold of you? And who do you want to hear from?
Yeah, so, I mean, we're running our hedge fund. We're growing. We're hiring. We're hiring analysts, engineers, data scientists, all on our website. Feel free to apply. If you want to, and we're growing the firm, growing our investor base. We're growing. A lot of things are moving in the firm. In terms of how to get a hold of me, I'm very accessible on Twitter. Just tweet at me at Kyle Samani. I generally respond to all non-trolls, although my volume is probably starting to get to a point now where that may no longer be viable. But I do my best to be responsive. Feel free to ping me on Twitter.
Brilliant. Appreciate your time. Hopefully we'll do this again in the future. Thanks, Carl.
Thanks, Peter.
How's that then? Did you enjoy it? I think with the new hedge funds that we saw coming into the space last year, it was a good idea to get someone like Carl onto the show and try and understand the things that affect him and their decision making around their investments. I really do appreciate Carl agreeing to come on the show. I know he was super busy, and obviously now I know he was in the middle of a fundraising round at the time, so for him to give me some time, I really appreciated it. As I said before, please do support the show. Review on iTunes would be really helpful, and follow me on social media. If you have any questions, please do get in touch. I do try and respond to everyone. Okay, see you soon.